Good morning, traders. It's 8:01 Chicago time, 9:01 Eastern. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight session has been fairly interesting. Market has pushed up and down and up and down, sold off right before midnight here in Chicago. In the S&P, the overall market stance in this morning is quite mixed. Gold is way off, not way off, but it's down $8 or 0.6%. The bonds are with them, down 26 ticks. The Nasdaq's down this morning 19.25 points, along with the Russell 4.7 points. They're both down about 30 basis points. And the leader this morning in the index verse is the DAX, up 73.5 or 0.56%. The S&P is down slightly from yesterday's close, down just 2%. Mostly the overnight session has been a whipsaw back and forth. We'll talk about that in a minute. Key items to note: Morgan Stanley reported this morning. It beat its earnings expectation by 7 cents, came in at 84 cents a share versus 77 cents. It's a big beat. Also, you probably heard that Apple has announced that it's repatriating $245 billion into the U.S., given the new tax laws. And of course, Bitcoin dropped into the 9,000 handle and has staged a pretty strong rally from there. It's up almost 20%. That's what's behind us. What's in front of us? Well, we also got initial claims and others. You can look up numbers yourself. Today, because of the Monday holiday, today we get the crude oil inventories. Those come out at 11 o'clock Eastern. Crude is expecting a draw of 3 million barrels. Distillates expecting a surplus of 2 million. Gasoline expecting a surplus of 3.983 million. I don't see U.S. speakers. So we have ECB Speaker Kerr at 9:30. Looking for ECB Speaker Villeroy at 12:30. That's what's ahead. Let's look at what we had planned for yesterday in our review portion, or review segment. So the primary trade idea, the big trade of the day, is to buy a dip, right? So we're looking for responsive action down into 89 or so. The market ended up dipping way lower, down to almost 80. So that took quite a bit of patience, just had to sit through that. But I did post on Twitter where I saw that weakness was being absorbed by the buyers, and how it was revving up to push. Now, just because I'm saying that it's likely to pull back down before the long, doesn't mean you buy off the open. I'm using order flow, and I'm using a lot of experience with order flow to read where that turn is and to play the probabilities of it turning. And so I'm looking for patterns and things like that in the order flow that give me a clue as to where the buyers or sellers are getting exhausted. There are some pretty simple patterns for that that I've talked about in the past and on webinar 5 on my site. So I'm not stepping in, but overall, this is what happened yesterday. We ended up pushing lower, pushing down into 2780 or so, and then launching off and running up, and we ended up pushing the all-time high by a point. So we put in a new all-time high yesterday. Again, as expected, We tested the day before, we tested the prior low by, I think, a couple of ticks or a tick, and then ran back up on the close. And like I said yesterday, if we get back above or stay above the 2788 low volume node from the prior day, then we're targeting 95 for a break, for a test and a break, meaning chop, and then looking for a continuation through to 2798 and then up above 2800 from there. Anything above 2795 is considered gravy from the 88 area, and that's what the trade was. So here's what actually happened. So let's play this back real quick. I'm just going to do a quick walkthrough. So we're looking for how sellers are coming in, okay, and we're looking for how the market's responding. You could see that we extended the opening swing, which was from 89 down to 85.75 before the buyer stepped in. So that makes it an opening swing, okay, and then we broke lower. So that tells us that the selling is pretty much dominating. The delta is negative, okay, so there are more aggressive sellers than buyers. Not more sellers than buyers, but more aggressive ones. So here we're looking for, okay, we're back to the mid, and then we're extending lower. We closed the gap at 83.25 from the prior day. So here's this part here, this portion here is the extension. There's the first push, pull, mid, extension. Okay, anything below here is also considered gravy for the shorter term short, but that's not the big trade of the day. So now we're looking for an extension down, continuation, and then now we're looking for it to stabilize, right? So you can see that it extended down. So we have the first push through the OS, pull back to mid, continuation, and this all looks good here to the downside. However, you can see here it's starting to struggle. So as we move forward, you'll see it's starting to struggle, and this is when I tweeted out that it's being absorbed. Be careful. That the market is struggling to push lower. Okay. And there it's fighting the mid, and once it gets through the mid back into the opening swing, I'm looking for a high probability test of 27.89. This is where the long trade was due, and the long trade is on, and then we're looking for a break of the IB high. Okay, it takes a while. There it is. Finally, we get range extension up above the IB high. Now we're targeting 95. Okay, 95 being, or actually 94.25, the overnight high is the open stat still, and the around the high volume node. So all you can do right here is hang and wait. There's 94.25. This is the overnight stat being done, being completed. And then everything above here, again, is gravy. We're looking for it to push through the 98, which is the next low volume node. See, this is the node that we're trading from the prior day. So we've tested the high volume node. This is from webinar 2, the high volume node. And now we're looking for a test of the extreme of that segment, which is the low volume node at 98. So we continue on. There it is, test of 98, and then again it's all gravy from here. So this is scenario number 1 playing out. There's the impulse move, 7 points. 7 points is definitely an impulse. That's a high second standard deviation rotation. We expect a continuation off of it. And then where are we wrong? We're wrong once it turns. If it's not able to extend the impulse up and it starts to turn, we are wrong below the mid. We start to become wrong below the mid, so the exit here would have been 27.86.5 or so. and it did not. That did not happen. So you just sit on your hands for the rest of the day and look for a large rotation down. You could see, the other thing you want to see is down here, this pane right here, these weird things. That's not an oscillator, okay? This is just measuring the rotations above. So what's happening here is it's plotting the rotation. So you see the 4 1/4 down, there's 4 1/4 down, okay? 2.75 up, 2.75 up, okay? And if you look at this pane, what's happening here, you'll notice that the bigger rotations above the red line are to the buy side. Below the red line, the negative rotations, we had a couple of pokes here and there early on. This is why you got to stand off, okay? But the bigger rotations are all to the upside. As long as we don't fall and have a big rotation down and bigger than 1 standard or 2 standard deviation move down, I am not interested in selling. Or if I'm long, I'm not interested in getting out. And it's just an easy way for me to manage the trade. But for most traders, it's unnerving to watch trade go their way and then to wait for a large rotation down. Then they sit there and go, gosh, you know, I gave so much back. I gave 6 points back on this trade. I could have gotten out sooner. Hindsight's 2020. I trade on information risk, not price risk, as much as I can. I don't wait for too much information. I'm just looking at what the facts are saying, and it's very hard to do, I understand, but it's something we need to practice. So blows through the all-time high right there, puts in a 2809.50, and what do we have? We have a profile that basically has put in a distribution down below and has behaved like a trend day profile. We have 19 points of range, which is also relatively high. It's more than 1 standard deviation for this product, going back 1,500 days. Historically, the point of control is near the high, so we expect, although we didn't have a terribly weak high, we do expect this overnight high to get pushed at some point in the session. But what we did in last night's session was to stick around and do this small range for the whole session. So we had about 8 points of range for the entire session. That's the review portion. Looking at the overnight to get our other contextual clues. Here's the overnight chart. This is what I was talking about, just big swings up and down, up and down, up and down in the overnight session. The volume was okay, higher than what we would consider to be normal volume at 200,000. 110 to 120. I think it's 110 to 125, according to the latest study, is about the normal volume, the expected volume in the overnight session. It's not the normal volume. It's kind of the most common range or so, and it's not able to sustain higher prices. It's trading in both directions. Both sides are fairly active in the overnight session. It's tested and retested the high volume node left behind yesterday, the point of control, and the low volume node left behind. So it's just all over the place here. So not much to glean from the other overnight session other than the fact that it has spent just as much time, almost as much time above the prior day's close as it has below. So the overnight inventory is relatively flat, and the delta is relatively flat. So there's not much we can glean from the overnight session. Here's what it looked like, what it looks like on the heat map. Here's the overnight session overall. Bright yellow or curry kind of color is the deepest depth, the highest offers or bids. And you can see how large these swings are. Pretty dramatic drops, peaks, drops, peaks, drops. Both sides are active this morning. So coming into today's session, carrying that forward, it's important to note that that's what we're coming in with, and we need to prepare for a fairly choppy open based on that information. Okay, so this morning we're trading at 28 against the 2800, 2801.50 near the overnight low. I'm expecting a wide swinging open. Okay, and I'm expecting the market to attempt to push lower, and then I'm looking for a fight up and down the range around the point of control. I'm expecting a fairly fat profile, fairly Gaussian trade, outside in type trading. How do I know that that's not the case? I know it by the rotations. So even though my expectation this morning is that we're likely to revert to the middle in today's trading based on how the market is, what the market stance is overall in terms of where risk is being allocated, as well as what the overnight session did. My expectation is that we are likely to continue on, and we're likely to continue on and carry that forward into the session. And so I know that I'm looking to trade from the outside in, meaning looking for the market to push into an area and then to fade it. However, if we get large rotations in one direction and one direction only, then I'm changing my mind. If the large rotations are upwards, which are more likely, then we're looking for new all-time highs, and then I'm targeting 2813, 1350, this double measured move target right up here. Does that make sense? That's the plan. That's the primary plan. I will leave the rest of it to you guys. It's 8:20 already here in Chicago. I'm gonna let you all go, but that's the key. That's the key area. That's the key play for the day. If we trend down or up, that's fine. Trend up. We're looking for a pullback to test to test the confidence on the sell side. Once we see confidence on the sell side is waning or is depleted, then we start to turn up, and we're looking to get long with the turn. And then the opposite but the same approach, the opposite direction but the same approach on the sell side. The sell side targets 27.89, the low volume node from yesterday, and then all the way down to 83, which is the current MC point of control, or the big magnet below is 27.83.25. Does that all make sense? I hope it does. That's the plan for the day. That's what I'm doing. I'm sticking to it. Good luck.